Hey there, it's Megan with Sidekick Accounting, and I wanted to talk to you today about the ERTC credit. So, there's been a whole lot of talk about the ERTC credit, and you've probably heard it, might have also been referred to as the ERC credit. There's usually promises or paraphernalia talk, whatever you want to call it, of all this money that you're possibly eligible for when you went through COVID, you have employees, and there's a lot of fraud being associated with this credit as well, because there are specific things that you have to have had happen to you or have impacted your business in order to qualify for the credit. Not everybody qualifies for it. However, there is a lot of firms that are telling people they qualify for it when they don't, and they're pushing the paperwork through, and those people might even be getting checks. But let me tell you, the IRS is for sure definitely going to be auditing people that get the ERTC credit because, for one, it's low hanging fruit. There's not a whole lot of initial regulation associated with it. It's kind of like this trust factor. And a lot of people who are going to be going for it that might not be eligible for it are going because they're trusting these providers that are actually ending up being shut down by the IRS because they are pushing through bad returns. They're pushing through bad information. They're pushing through this information that people are not actually eligible to receive. And so there's some things that I want you to be aware of. Also, I was talking to somebody the other day and they didn't think it was like a real thing because they've been getting so many calls about it, and come to discover that it actually was, that was something they were pleasantly surprised to and interested in finding out about. But I wanted to lay down some initial qualifications so that you can kind of pre-qualify yourself before talking to somebody. Also, I wanted to let everybody know that we partnered with a very stand-up firm who is specializing in ERC. They've been vetted. They don't charge upfront fees either, so they won't charge anything until you actually receive the money, which to me also is another layer of legitimacy because most of those companies are charging people and then disappearing. And that's a really big red flag for me. So this is a really great way to go about it, where you don't have to put up that upfront cost, and then you're able to get your ERTC money, and it's going through an organization that's very well vetted. There's a gray area, and I think everybody needs to understand where their strengths and their weaknesses are, and you really can't be a jack of all trades. And so this was one area that our firm certainly can do and has done. However, to really be a full benefit to it, we partner with this organization. So we would still help you pre-qualify for the ERC, but then it would go to the next layer of accountants that we have on our team now, through our partnership with this organization. So if you're interested, please drop me a comment, DM me, and we can set up a time to go through it, pre-qualify you, get the initial paperwork going, so then it can get over to the other accountants to be able to get that return in motion so you can get money that may be owed to you. But not everybody qualifies. So let's go through what are some of those qualifications. So the main one, there's two different ways that you can qualify for the ERC credit. One really simple, kind of more straightforward way to qualify for it is to have a reduction in your revenue from in 2020 and 2021, compared to the same quarter as 2019. So for instance, my quarter two in, not me personally, for example, in quarter two of 2020, my income was reduced by 50% compared to the same quarter two in 2019. So you got to have some really basic things in place. You got to make sure your financials are in place and itemized by the year, by each quarter, so that you can compare one quarter to the next quarter. So in 2020, the quarters in comparison to the same 2019 quarters had to have a 50% decrease in revenue, in that same quarter. And then in 2021, this laxes a bit, where you only have to have a 20% decrease in that quarter compared to the same quarter in 2019. So both years go back to 2019 as a comparison, but 2020 has to have a 50% reduction and 2021 has to have the 20% reduction. Now, if this is not the case, because I know a lot of businesses, especially a lot of our clients, didn't have this happen. They actually had increases in revenue, and so they don't qualify for the ERC. Not to say that not everybody will not qualify. As a result, the numbers have to be broken down, but not everybody qualified in this particular requirement. However, there is another area that you can qualify for the ERC, and that's if your business experienced a partial or complete suspension of operations. However, those things can include social distancing requirements that reduced your capacity. It can include a reduction of hours of your operations, so where your operations were impacted by COVID, distribution delays, supply chain disruptions, or suspended on-site work or client and needed client meetings. So there's a few other ways that you might qualify as a partial or complete suspension of your operations. There has to be some kind of an impact that resulted in everything that was happening from COVID. So maybe you were an organization that stayed open, but as a result of not being able to get your lumber, you weren't able to then perform the jobs. Or maybe you had a daycare where you had to reduce your staff and have less kids, and it impacted your operations. Maybe you were impacted by not being able to purchase cleaning supplies, and there were no substitutes available. So like toilet paper, for instance, when there was that big toilet paper, frenzy, that might have been a thing that impacted your operations where you weren't able to purchase that. And then there weren't any other options in the industry because it was out everywhere, and then that was something that impacted you. So that's one example, but those are some of the things that have to impact. So if you think about it and you're considering, whether or not this is something you'd qualify, kind of do a self-check and a self-review on those things to see if you meet those requirements. And if you do, or if you think you might, schedule a call with me so we can walk through whether or not your business qualifies. The other thing that you have to note is that you do have to have had pay employees in 2020 and 2021 and doing the quarterly filings for them. So actually have them on payroll where you were paying in the taxes and doing the reporting for those quarters in order to qualify for this credit. So you have to have employees, W-2 employees on staff. And the other thing is that if you started your business in 2020 or 2021, so you don't have anything in 2019 to compare to, you may still qualify for this credit. So you want to still reach out so we can have the conversation, or my team can have a conversation with you to see if this would be something that you would be able to qualify for, because it is a great opportunity. If you qualify for it, it's a great reward that you want to be compensated for. And then there are some other details. If you have PPP or if you got grant monies, that doesn't mean that you're going to be disqualified from having the ERC, but that does reduce or could potentially reduce some of the eligible amounts that you'd be eligible for, because you can't double dip into those COVID relief funds. So reach out, be aware that if you don't want to work with us and you want to work with somebody else, or if you have worked with somebody else, really ask them questions about some of these things. And if you're like, oh, I definitely didn't qualify for these things, so I shouldn't have filed ERC, make sure you get ahead of that as well. Either way, we're available. So if you have any questions, please feel free to contact me, and I'll talk to you later. Bye.